So welcome everyone to a My Pinnacle Network webinar. This particular session is about knowing your numbers. It is focused on crystallizing your KPIs and staying on top of your business. And I will have our panelists talk about what a KPI is. Our panelists today, well, let me talk about the sponsors first before we jump into the panelists. Our sponsors today are My Pinnacle Network. And Joe, you want to give greetings and an explanation of who we are?
Absolutely. Greetings all. My Pinnacle Network is a business-to-business networking organization. We now have 6 locations. Those locations are Westboro, Mansfield, Needham, Pembroke, Braintree, and we're now north of Boston. We formed a new group that's going to be meeting in the Wakefield, Woburn area. And the group, like I said, it's business-to-business professionals and small business owners whose customers are other businesses. Please look us up at mypinnaclenetwork.com if you're interested in checking out a meeting.
Thank you, Joe. Our other sponsors include Rockland Trust, who offer a wide range of banking, investments, and insurance services to businesses and individuals. They've got retail branches, commercial lending offices, investment management offices, and residential lending centers in Eastern Mass and Rhode Island. And our other sponsor, our third sponsor, is South Shore Networking Professionals. Matt, let me give it to you to give a quick explanation since you are one of the leaders.
Thanks, Steve. SNPG was started about 11 years ago as an open networking group to foster networking as a method of marketing. And we've been doing that. We haven't had many events lately because of the pandemic, but we've been participating in webinars and education online, and we'll continue to do so. Thanks.
Thank you, Matt. And so I am Steve Dubin. I'm one of the founders of My Pinnacle Network, along with Joe DeRamo. And I'm also the founder of PR Works, a lightly used PR firm in Plymouth, Mass, serving clients all over the US. I'd like to introduce our panelists today. Dennis Riley is the founder of Trusted Business Growth Advisors. Of Goals to Results is the name of the company. And he's been helping business people with the metrics of their business for over 2 decades. Jim Henderson is a licensed and practicing CPA with over 30 years of experience. And he's based in Braintree and in Florida. And I always leave a little time here for rebuttals from my bad introductions. Any corrections there?
Looks good.
All right, good.
Well, that's where I am right now. I'm in Florida. So.
Yeah, that's what I thought. Okay. You can give us a weather report at the back end of this. Okay, so I leave it to you guys to run with the show.
Sure. All right, I'm going to share my screen here. All right, here we go. All right, good morning, everyone. Dennis Riley here from Goals to Results. Thanks for the introduction, Steve. Yeah, today we're going to talk about crystallizing KPIs, business made easy by the numbers. So here we go. All right, about me, Dennis Riley. I'm a business strategist helping small business owners work closely with small business owners on data, strategy, and systems. Been a business owner since 1994. That's when I started a software development company that lasted 20 years. At the same time, I also decided to do a business consulting company in 2011, and I've been doing it ever since. And hopefully that goes at least 25 years. That'd be nice. I've been working with data since college, so you could say I'm a little bit obsessed with it, and I definitely love problem solving. All right, why data? Data is your company telling you a story. The question is, do you know the story your data is telling you? All right, the more you know about your data, the more control you have over your business. All right. Now, KPI, there are so many definitions of KPIs. I'm just going to tell you my definition. My definition is a key performance indicator that is a piece of data that is so important that when it moves up or down, it has an impact on your business. Okay. Oh, sorry about that. There we go. All right. How do we know the story the data is telling us? Well, we're going to look more closely at profitability, cash flow. Then we're going to go below the surface. So for the first two, I'm going to have Jim take it from here. Jim?
Okay, thank you. My name is Jim Henderson, a CPA, over 30 years experience. We have a practice. We have offices in Braintree, Norwood, and Plymouth. And right now I'm in my satellite office down in St. Petersburg, Florida, operating from here for tax season. The two main things that we do with our business clients is we help them understand their numbers and as Dennis said, what things they can do to move those numbers. And basically having them work so understand those numbers so they can earn more in their business, and then coming up with strategic tax plans so they can actually end up keeping more of what they earn. What we find is that most business owners, about 80% of businesses we find use QuickBooks, but fully 80% of them, when they come in the door to us, their records are not up to date. So if they don't have good financial records, they're not able to measure where they're at. And as Peter Drucker said, you can't manage what you can't measure. So we're very emphatic about getting people to get their numbers up to date and current so that they can use those as a tool in order to move their business forward. And a KPI, following up with Dennis, you can go back, Dennis, I'm sorry. A KPI is a value that can be measured to demonstrate how well an organization is achieving important business objectives. The KPIs is essential to evaluating the success in achieving the business goals. So what I wanted to do is I wanted to give a little demonstration of a company that we were associated with. They now were acquired. And this just demonstrates two key things that we emphasize with business owners. And talking about profitability, which is very important, but just as important is cash flow. So if you don't have liquidity and you don't have enough money, no matter how well your numbers are how well your operations are running, you're not going to be able to survive. So we had a travel agent client about 20 years ago. They started an online service called Destination Wedding Travel Company. And basically what they did is an online platform to engage couples to do weddings at, exotic remote resorts, mostly in the Caribbean. And you would think that this would be, kind of an expensive proposition, but actually the destination weddings end up costing less. And the main reason being is because the guests that end up coming, fully you don't have over 100 people traveling, but you might have 30 to 50 traveling. They're all self-paying because they look at this as a vacation. So the bride and groom, kind of get away with just paying for themselves. So they developed an online, developed the structure, the platform. They had online marketing campaigns to drive the business to the site. And all that was working very well. We had the business started, and there were two startups here. The first one failed. The second one was successful. And the revenues projection and commissions earned the first year were $1 million, second year was $3 million. So it was going to ramp up pretty quickly. And you'll see in the slides that I have coming as to what percentages of costs they were operating under. And as I said here, the first effort failed miserably. The second, with only one major change, was very successful. And it was acquired ultimately by $10 million by a much larger player in that market who wanted the name and wanted the platform. And so it worked out pretty well for my client. So we take a look at this and try to understand why one failed and one succeeded, and we can go through that. So here I have the profitability analysis. And you understand profitability is based on the revenues and then the costs associated with those revenues. So this is full accrual based. So we have the first option, we call it weddings away, $1 million payroll costs, 45%. So they had a staff payroll who were engaging with the engaged couples, pardon the pun. And they had overhead costs, including marketing and rent for the space they needed to house all these agents. And so the total cost was $750,000, and the net profit projected was $250,000. The second scenario is the same revenue, but instead of having in-house agents, they had subcontractors, independent, who were working remotely. So while they ended up paying more to the subcontractors, they were able to eliminate certain overhead costs. So their profit margin was 20%. So they were making $200,000. So this is the year one analysis of profitability. Year two, in the next slide, basically following the same scenario. The first scenario was making a lot more money. So you can see as a running total, they were projected to make $1 million over the first 2 years. The second scenario, the profit was still there, but albeit at a much lower number. So this says, okay, profitability, and most people looking at this and say, well, I'm doing great. The numbers are there. You know, what's the problem? Well, I'll start to show you the problem. We go to the cash flow. Now, what happens is when you have a wedding, you know, they book the wedding maybe in February, but the wedding might not happen until September. So what would end up happening is that you book the wedding, you're not getting paid on these weddings until the wedding happens, and then 30 days after you get the collection. So under either scenario, the collections are only going to be collecting about half of what they actually booked during the year for these travels. But when you look at the costs, they still have the payroll costs and the overhead costs. So you can see that they're incurring these costs because they're coming out of pocket, but based on the collections, you have a cash flow deficit. And they started off with $250,000 in cash. So at the end of the first year, they had zero cash. Under the second scenario, same revenue collections, but the key here, and I'm kind of giving this away, is that they were paying the subcontractors after they collected the money from the resorts, et cetera, for the booking commissions. And their overhead costs are paying out of pocket. So you can see that under the second scenario, the cash flow is there because they're only paying their help, which is their major cost, only when they collect. And so you can see at the end of the first year, even though they were break-even cash flow, they still were able to retain the cash that they had. In going to the second year, you can see how with the rapid ramp up in the business, the collections are still lagging. So under the first scenario, they're running at $250,000 cash flow deficit, and now they're in the hole $250,000. The second scenario, they're actually building cash because here again, the subcontractors are basically financing the operations. They're not getting paid until, you know, like a typical a commissioned agent, they're not getting paid until the company is paid. And this is an actual true story. The business took off under both scenarios. The first venture crashed and burned because they ran out of money. They couldn't go to the bank. The bank said, well, we're only going to loan you money if the revenue is real. And the revenue isn't real until the event actually happened in their mind. So while you had a booking to earn $8 to 10 grand for a wedding, it wasn't, in their eyes, it wasn't quote unquote bankable, and they wouldn't loan money based on that. So just like we found in these times that currently, and so they may have been a little bit ahead of their time, dealing with remote workers and eliminating office space, even though your margins, profit margins might suffer, with what you save in other associated costs, such as rent, and also what you save in cash flow, because you're only paying out your major costs based on what you actually collect. The second scenario ended up taking off and was successful. And as I said, a big player in the market came in, loved the website, the URL, loved the platform, and saw that they could use this as a springboard to expand their business by offering this avenue through their channels too. So this is what I try to impress upon clients, is that they have a wealth of information in their financial data. And unfortunately, as I said, most people, when they come, business owners, when they come in, fully 80% of them, the numbers are not current and accurate. The bank account's not reconciled. They haven't posted sales. All their payables are not entered. So when I say, how are you doing? They basically look at their bank account and say, oh, well, I have 50 grand in there, so I must be doing pretty well. Or I only have 5 grand. Jesus, I'm not doing that well. And that's not really any way to run a business, because while it's historic data and it doesn't, change the story as to where you're at a particular time, but you can use that historic data in order to see certain trends and KPIs to help you manage the business going forward. So if under the first scenario, they had been able to figure out a way to bring in financing to do that, they might have been successful. But truly, the second scenario, I think, is the best one, because you're spreading the risk of the wedding ultimate collection of revenue. You're putting it on the agent and how good of a job they do in keeping that wedding couple, in the process and getting them to their wedding. I mean, you can't do anything about if the groom runs off with the maid of honor, but you still, and those things actually happen. They had stories like that. It was pretty interesting, but it just spreads the risk and makes it, a more viable business operation and a more viable model. So what do we do next? Oh, okay. And what I'm a big proponent of, and I'm not, believe me, when it first came out, I hated QuickBooks. I didn't like dealing with it, but they're the major player in the market, and they have a lot of tools and a lot of resources to assist the business owner. And so rather than trying to reinvent the wheel, I try to work with clients and work with apps and other software that integrates with QuickBooks. So QuickBooks internally has a cash flow, QuickBooks cash flow planner that's part of their package. So you can get an idea as to how your cash is going, and it can actually project when you're going to have some dips in cash flow, which is important in running your business. And Bill.com, which is a bill paying and receivable application, they have a component in there for cash flow planning too. Business planning software, there's a lot out there. These are 3 that we use, and I like them because here again, they automatically integrate with your QuickBooks records, so you're not having to manually pull data in from QuickBooks into these applications to get a look at your KPIs and trends, et cetera, et cetera. So they're pretty powerful tools. And the last one is, 30 financial metrics and KPIs to measure success in 2021. There's a ton out there, the things that you can be doing, but I think, above the surface, and Dennis is going to go below the surface on some of this stuff, but above the surface, it really just comes down to profitability, gross margin, cash flow. Those are the things that I emphasize with clients to have, to have in place. And I like this chart, and I stole it off the internet somewhere, but it talks about the KPI workflow process, and it's not static. So the KPI, you track it, you measure it, you process the information, evaluate it, and then you do it again and again and again. This helps you establish trends to see how your things are going. And obviously you want to establish some positive trends and have some impact on them in various decisions that you make as to how to run your business and what things are going to make your business successful. And the next one is, okay, and this is where I hand it off to Dennis, because as I said, the regular financial reports coming from QuickBooks, monthly income statement, balance sheet, cash flow, those will give you the above the line or above the surface, and Dennis is going to go in to below the surface. Go ahead, Dennis.
Thanks, Jim. Appreciate it. Oh, by the way, we are going to give the PowerPoint out. So the links that Jim had, you don't have to write those links down. We're going to give them to you. So just in case. Okay. here we go. Below the surface. I love this picture here. Above the surface, you got the financials. It's seen. And like Jim was saying that, a lot of business owners only use a subset of those financials anyways. And, you don't want it to be an iceberg. You rather have it to you want it to be a safe haven. And sometimes the financial is just an iceberg because they don't know anything about it. But the thing is, just like an iceberg, there's a lot happening below the surface. And so as a business owner, you really got to go and get the true picture by going below the surface. And this is the below the surface. There's data everywhere. There's data in sales, marketing, websites, your customers, internal systems that you have. All this data can be measured and can be measured accurately. And the key thing is captured accurately. If you do not capture your data accurately, you're pretty much not even going to do well because you're going against inaccurate data. And when you have inaccurate data, you're not going to get successful results. Good news about this is that all of these are intertwined. Your sales, marketing, website, customer, internal systems, they can connect and feed off one another quite nicely. All right. So what you want to do is when you first dive in, you want to get a picture of your baseline. It's kind of like going into a mall and you're seeing a directory. You want to find the X first. Where are you? And then you can decide where you're going to go after it. But you got to look to see where are you. So there are a lot of tools out here. This is just a subset of some of these tools. You got CRMs like HubSpot, Salesforce. Then you also have like Google Analytics stuff. You have, there's all this stuff that, Excel spreadsheets, Google spreadsheets. You got systems that you make up. So I just did generic ones here, but there's internal systems. Obviously, you got your social media platform. And you also have things like MailChimp, which is an email marketing campaign. So if you look at this, you're like, oh my goodness. Now you see why there's data overwhelm. That's why you see there's so many people who have so much data. The great news is there's a lot of data at the hands of a small business owner. Unfortunately, that's also the bad news because data overwhelm happens very quickly. I see that from my clients all the time. We come in and say, okay, let's see what's below the surface. And they have no clue because it's such an overwhelm. Most of my clients have 7, 8, 9 different ways that they can log into different systems. It gets overwhelmed quickly. Now, how do you get that to more? What you want to do is you want to take these tools and you want to kind of put it into the structure of your business. And then when you find your KPIs, you want, what's holding the structure up? So all these tools have all different data, but what data points do you really, really need to check out some of this stuff? And so what I do with my clients is I create a revenue workflow for them. Okay. Now, revenue workflow is pretty much, me being in the technical industry, reverse engineering, I used to do that all the time. And so I can use reverse engineering to help small business owners. And the first thing I say, okay, let's look at your revenue workflow. And they go, what is that? And they're thinking it's all financial. It's like, no, it's the workflow of how you get revenue. All right. So we start at the top. We say, okay, I always ask the first question, how do you get your revenue? All right. Then I'm going to go each level after that. It's just like, a toddler when he or she first starts talking here. Why? That's what we're doing here. You will ask a question. We'll just keep digging. You keep digging until there's no more digging. And in this case, it's called reverse engineering. So I want to show an example of this. So we said, all right, I asked my client, how do you get your revenue? And they're saying, oh, we have lots of different packages that we offer. Okay, let's start with package 1. Okay, great. How do you get that revenue? Well, I have discovery calls. All right, great. Fantastic. Okay, now what do you do with it? You keep going down. So you just keep going lower and lower and lower. So then, okay, where do you get these discovery calls from? And they start listing items and, okay, well, I get them. I have an online email campaign. I have some client referrals. I have networking, and they do 2 or 3 other ones. They're like, all right, you know what? Let's deal with a couple of these right now. So we'll say with the online campaign, we'll say, okay, now what? Well, I have an opt-in page. Great. Okay. Where do you get that opt-in page? Well, how do you tell people about that opt-in page? Well, I do emails. there's partners that I use, there's blogs, podcasts, posts, newsletters. And again, they just keep talking and I just keep writing, and so I wait until they stop and then I keep asking more questions. And so we go really, really deep on that side. Okay. Now, we get client referrals, and the guy starts talking about client referrals, but all over the place. And I really can't get it pinned down, the client referral part. So at that point in time, I say, you know what? I'm going to go back to the network. Let's go on to the third one, networking. And so we start talking about networking, one-to-ones, and then, well, how do you get those one-to-ones? Well, we have networking needs. I go to webinars. I do all these things. Okay, great. And then what do you do even further? Okay, you got networking groups. Great. All right. So now we keep going there. And then I put a little question mark next to the client referrals because he really doesn't have a system put in place. But you know what? I'm going to hold on to that. We're going to talk about that later. So I put like a little red question mark. So now we have some kind of flow. This flow changes, by the way, but this is, again, we're trying to find the X. We're trying to find where they currently are right now. So we keep going and digging now. So then we say, okay, well, what comes now? We have this flow. Now we also have all these data tools, how we put the two together. I start going with the flow and we're saying, okay, back to your discovery calls. Where do you store the data? And, the person says, oh, I have HubSpot. Great. I put HubSpot there. And then we go through some of these things, online email campaign. Okay, what's that? All right, that's definitely, MailChimp. I use MailChimp here. Great. I have an opt-in page. This is, my website. And like, okay, you have Google Analytics? Yeah, I have Google Analytics. Great. We're going to put the Google Analytics here. Same with the outreach methods. There's all these social media ones. We'll just put LinkedIn, Facebook for now. Then they also have like some spreadsheets that they keep track of data. Great. Again, they have nothing on the client referrals. Then they go over to network. And these systems now are more self-made systems, but there's still areas to capture data. Sometimes they capture it well, sometimes they don't, but there's always patterns. And that's why you have to capture all the data so you can find the patterns. So in this case, you got, networking, there's a system or a way to collect data there. There's another way to collect data with the networking meetings. And then there's the networking groups. Okay, so now what? Well, now you're going to go through each of those data systems and you're going to look at the data points. All right. So when you go back up here, you're going to go into HubSpot. All right. And you're going to go into MailChimp, something like Google Analytics. There are over 1,000 data points in Google Analytics. So you're trying to find the one data or the one subsets of data that really moves the boat for you. That especially, for example, LinkedIn and Facebook or some of these other social media campaigns, they have their own data, but you can also find entrances to your website from that data. So that's why I said at the beginning, you want your data connecting with something like Google Analytics. It will say, hey, I got these things from this social media channel. And then you can go into those social media channels and compare that data and see them linked together. So there's lots of different KPIs here. You can, total sales, total leads, website hits, opt-in page views, clicks, etc. We can go down the line. Okay. But you go into this, and it is kind of painstaking, but you go into it the first time, you find out what things, if that data moves, it would move your business. All right. So now that you have these KPIs under the surface, now what do you want to do? Well, like I said, some of these are 7, 8, 9 systems you can use. So, you have to log into 7 or 8, 9 systems. You write down where the KPIs, or you create a dashboard where they are all one place. And there's tools that I use that I can gather the information from each of these systems. And now, for example, instead of having all these systems, now what happens is you have one dashboard that shows all the different KPIs of the systems. It's one login, one place to see a quick overall view. It's unique to yours. This is your dashboard. You're not trying to get a dashboard from the shelf and that you try to push a square peg into a round hole. This is made for you. For example, up the top here, just Google Analytics. We just took certain places from Google Analytics and we compare it week to week to week. so that, and this is just a snapshot. We can make another dashboard that if you double click on that, it will see Google Analytics data. If you want to see profit data, some of the financial stuff, you do stuff like that. This is some of the CRM stuff, the total leads you had, total sales, stuff like that. And then maybe this is your pipeline of what active activities are out there, and maybe comparison of some revenues. There's lots of different ways that you can do out there. And then there's some charts over here as well. So now you have your data, you have your dashboard, life is good. Now what? Now it's on to strategy. And from the strategy standpoint, what you want to do is you want to make sure that, all right, does the data match? Yes, it does. Okay, now what can I do differently? Well, maybe you notice that, to get the amount of discovery calls you need a lot of pipeline in, because maybe your ratio of how you're doing is a lower. And so you need more leads. Well, or you could say, okay, how do I improve on the ratio of closing calls? Maybe this system right here needs to improve so that when you're doing one-to-ones and when you're looking for one-to-ones, you're getting the people that you want to get in front of, not just anyone. I mean, there's networking, people say, oh, I want to get as many one-to-ones as possible. Yes, you do, but you also want to make those as strategic as possible. What are you doing in those one-to-ones? Where are you looking for? How are you being seen? Stuff like that. So there's some strategy that you can do on that part of things. Back on the online email campaign, there's a lot of strategies you could do here. What opt-in works? What opt-in doesn't work? I mean, there's so many different things that you can do there. That's what we help with strategies, and we put systems in place as well. So as goals to results, this is what we do. We help set up revenue workflows. We research data for KPIs. We create strategies. We create systems. We create dashboards. We help our clients in the trenches through all these different tools. So, Jim, what do you do?
Break in for a sec. One of the questions I have is there irrelevant KPI? So people think that some aspect of their business is an indicator, but it's really false. So a really simple example of that is, at one point we had 3 Daves become clients in a sequence. Well, that's not a good indicator for us, right? We're not just going to go after guys who name Dave.
Well, I think you should know. That's a good indicator. Dave and ball guys, that's usually what you have to do. No, you're exactly right, Steve. That's the thing is, and that's why with the, just quickly here, when you do the deep dive here and find out what tools work for you, you don't just grab some of this stuff. For example, in Google Analytics, maybe, there's lots of what outreach you use. Maybe you have an Instagram account that nothing, you get crickets for that, but you're just saying, hey, look, I get X amount of followers. It's not a question of some of these numbers. It's not a question of that. It's a question of what works for your business. So yes, some of these KPIs, it's like, oh, look, I'm doing this. Well, and here's a perfect example. Perfect example is like trades. Okay. For my business, I do really well with trades, but unfortunately, a lot of the trades owners are so busy that they can't implement some of the stuff that we work on. So it's a real struggle on both our parts to get where we need to go. So even though that trades is great for me, and even though that, at the surface, it looks really good that, oh, I have to go after trades all the time. It is a tough prospect for me, just only because the trades are so busy that they don't have time to get together me as a whole. So I could look at a KPI and say, oh my God, I'm attracting so much trades. I'm going to do everything I can to go after trades. And what in reality is that even though that number might look good, behind the scenes, it really isn't. The success rate goes down big time. Just like Jim was saying with the revenue versus the profit after the expenses. It's like it might look good at the beginning, but more and more you dig, that's what happens there. So, all right, so let's go back to me. All right, Jim, what do you think?
Well, I mean, I agree with what you're saying. I think the evolution of most businesses, and I go back and take a 10,000-foot view, is that everybody gets into business. I shouldn't say everybody. Most people, because they're a technician, they have an aptitude in a certain area. For me, it was accounting and taxes. So I was able to get that and get running, and it was relying on me. And then the only way I can have it relying on other people working with me was to have a system and structure. So we have great systems and structure to deliver tax work, to deliver financial statements to our clients. And that's, most businesses have those operational structures in place. Otherwise, you know, it would be chaos every day. But I think the important thing to take away from here is that you have to have some measuring capability. So you have to be able to look at your financials to see how you are performing. So if the industry average is that payroll cost should be 45% and you're running at 60, well, you got some problems and you're going to have to look at that. So definitely some higher level financial statements will be able to tell you that. But usually as a technician, you just stay focused. It's like the E-Myth. You stay focused on what you're comfortable with. And you're not looking at structure, just like we're talking about here, having a sales structure and a system. And that, so Dennis is talking about the KPIs coming from that structure, but I think, I don't want you to miss the fact that just like having good financial statements, you have to have a sales structure. You have to have a methodology to fill that pipeline and qualify those people and move them along in the process. And I know in our business, we have been very lacking in that. I mean, I look back at marketing and what we spend in marketing for the last 10 years is a mere pittance. And we're fortunate because we get a lot of referrals from existing clients. But I know if we want to continue to grow and scale, we have to have a system that's going to be feeding us, you know, more business clients and more individual clients coming into the pipeline. So I just don't want you to lose the fact that you need to have those structures. And to address marketing, you have to have a system or a structure in order to do that. And then you have to, with the KPIs, as Dennis said, you have to track that in order to improve it and see how it's performing.
All right, one more thing that I want to just switch back to, for example, back to here, this one about, you know, we're looking at this question mark right here, client referrals. Once you figure out some of the things, you realize, okay, if I can put a system together to handle client referrals a lot better, like in this case, they didn't have any system at all. So if they're getting client referrals, what client referrals are working? Do you have a mechanism of, you know, first of all, what are the value that you're giving your clients? You know, is it top rated value? And if it is, you know, are you getting testimonials from those clients? You know, right away, get those testimonials, throw it on your website, throw it in your outreach method. You know, so now what happens is maybe to improve some of the percentages of how you get your discovery calls and your purchases is that if you had a really good client referral stuff here, then that gets to feed all of this. So, you know, maybe you say, okay, here's a testimonial, but then maybe you have a client referral package that you say, hey, look, for every client you referred to me, I'm going to give you X amount of dollars or X amount of whatever, you know, and then, or maybe you set up little opt-in pages just for those specific clients because, oh my goodness, you know, these type of clients are really good. I'm going to give them their own little opt-in page. So every single time that they refer people, I'll see right off the bat, hey, when it's in this pipeline, hey, I saw that it came from Joe. So, you know, now I know, okay, I got to keep feeding Joe because he's giving me amazing clients. It comes through the pipeline and I'm getting more discovery calls and I'm getting from discovery to the sale. And so like Jim just said, you know, the system's in place. You have that, you know, the sales, the marketing and all that. It can really be a nice, well-oiled machine. And using these data tools and your flow and having a strategy can absolutely make your life a hell of a lot better. So that's what I want to say. All right, we're going to go into questions first. But before I close the screen, I just want to give you this thing that right now, we gave you a ton of information. If you want to learn more, there's my email, there's Jim's email. Again, if you reach out to us, you have any questions that is past this form, feel free to do that. So, all right, Steve, definitely. Back to you.
So one of the questions I have is some people think that the end result is the KPI, so their gross revenue or their net revenue. You want to describe, either one of you, why that is not really a KPI?
Jim, go for it, Mr. Financial.
I'm not clear. When you say gross revenue or net revenue, what do you mean, like returns and allowances after that, or?
Well, what you're billing monthly,
yeah,
and maybe what you're keeping in your pocket monthly. those aren't necessarily KPIs. They're really the end result of the KPIs that help you get there, correct?
Yeah, well, what comes first, the chicken or the egg or whatever? I mean, you have revenue coming in, and that obviously is gross revenue, what you're billing. And then you have your operating costs in order to provide that product or service, and you come down to what you keep in your pocket, which is the net income. And here again, as we discovered earlier, it doesn't necessarily mean that that's sitting in your pocket. It could be sitting in receivables waiting to be collected. So those numbers are important. But I think, as Dennis said, when your revenues just don't happen by magic. There are methodologies in place, whether they're referrals from existing clients, networking, online campaigns. All these things would potentially result in sales because they go into the pipeline. You follow up, you manage, you do some discovery, and then you find out if there's a good match. You give them a proposal, and then they're onboarded, and the service starts. So you want to measure those to say, okay, how many people do we have in the pipeline? We have a client who every month when we do their monthly meeting, we look at pipeline. Okay, how many proposals do you have in the pipeline? What are the gross values of those proposals? And as we see them going up and then coming down, it tells us that, hey, you have to work on getting the pipeline filled because it looks like you're going to run out of business in a month or so. You don't want to find out in a month or so you have no prospects, because to build that back up, like Johnny Appleseed, you have to plant, you have to do these things in order to realize the benefit at some future point. So they want to have those things going. And another metric would be the success rate of, how many proposals you put out there, what's the success rate, what's the dollar success rate. Those would help you in evaluating, where you're at, and also future endeavors as to what you're going to do to tweak the marketing and sales efforts in that area.
Okay.
And I'll add something here just by looking back on the screen, go back to the financial and the dashboard here. This is really a working one that I have with one of my clients, and when we would meet, we would go through and we would see the bounce rate. This is just one aspect of looking at your website and how it's working. There was one time I was going through and the bounce rate, was in like 50s, 60s, and all of a sudden it went to 90. And we're like, what is going on here? And so we dug, we dug into this we double clicked on the data, and when we got to see more and more of the detail, we found out that within the last couple of weeks of that bounce rate going up, that the people who are going to the website shifted from the desktop to the mobile. And what we found, and we were wondering why that was going on and what was the correlation. And I found out that when he had his mobile app on, when you looked at his website from a mobile, something broke, and that people weren't being able to reach him. So what happens is it became a totally different experience for the user when they were on mobile. And that was the extreme thing. If we didn't look at this data and we didn't do anything about it, all of a sudden we would have saw maybe revenue going down. And by looking at the data earlier, we were able to catch that. I was able to make sure we got that fixed. And then it was almost like going, taking a couple tires off the road and then swerving back in on the road. Whereas if we didn't look at this information at all, it could have been a total disaster.
Okay, thank you.
We have a question from Matt Phillips. He asks, what is a good number of KPIs to measure on a daily basis as a health check?
All right. You don't want, here's the thing. You don't want to be overwhelmed. Okay. And that's why if you're logging into 7 different systems that maybe has 100 data points each, or trying to find the data, is so easy to get overwhelmed that way. Whereas if you can narrow your KPIs down to one area, you can look at that area as often as you want. Some people do it daily, some people do it weekly, some people do it monthly. It depends on the KPIs. Something like Google Analytics, weekly is not a bad idea to look at to see, hey, because you get to see right away something, because especially essentially, if you're doing an online campaign and you tweak that online campaign, you want to see the results of that tweak. It may not be a week, 2, might be 3 weeks out, but who knows? But you get to see either which shift it's going up or down. So the answer to your question was the exact number. To me, it really based on your business, what numbers really move, and it move different areas. Because when we go up to this one right here, I just want to swing back over here. These are there are other areas, but these are the main areas that can definitely shift your financials one way or the other. So to say, okay, I'm just going to have 5 KPIs, I'm just going to have 1 sales, 1 this, 1 that. That's definitely not would be accurate. It's what is a subset here that will get this going. So when you go back to something like this, I can count up, oh my God, there's a lot of different KPIs here, but it's just it's almost like a dashboard on a car. It's like there's so much information on that dashboard, but you're able to see it quickly. How much gas do I have in the tank? Is my engine overheating? How many miles did I have to go? So it really depends on your business, and also depends on what you want to look at each time. Because there's some KPIs in Google Analytics, there are some things that, like I said, there's over 1,000 data points in Google Analytics. And so right now, so even though maybe you look at 5 or 6 areas, maybe something triggers something and you go a little deeper. Maybe you look at 10 more areas or something like that, because you see something a little bit move.
Yeah, I like to take a more practical approach in looking at this, because it's almost like learning how to swim. You can't say, okay, this is how you move your arms, this is what you do, because like I learned how to swim. I think my father threw me in the water, and then you figure it out quick enough. And I think it's sort of like that with your financial records. If you're looking at QuickBooks, you can explore and go into QuickBooks and find out that there's a ton of reports that you can get that go beyond just the basic P&L and a balance sheet and a cash flow. So you can look at it over certain periods of time. You can see trends. So I would suggest to people as a course of action would be, okay, make sure my QuickBooks are up to date and current, and then delve in to see what reporting is coming out of it, because you can get KPIs and certain information from your financial data and see which ones are important for you. And then you can make sure that those are pinned onto your dashboard, so that when you open up QuickBooks, they can come out as saved reports or saved information or saved graphs, and see that information. Once you start getting that, then I think you can look at and say, well, what are the things that I'm going to need? How can I tie this into, my CRM or other things to pull data in and get a dashboard like Dennis is saying. But I think that is kind of like maybe in the process might be step 3 or 4 or 5, because if you don't do the basics and get your financials in place and start to understand what key metrics move your business, then going in and doing this deeper dive, which I think is great for businesses, because this is what you really, really need to move the dial. You have to have the basics in place first.
All right. Thank you, gentlemen. Any other questions from the audience? Any ideas as to KPIs that you'd like to determine whether they make sense to you or not? I think you guys covered the subject really well. So without further ado, we will follow up with everybody.
Oh, Steve, we have one more question.
Yeah, go right ahead.
It's from Paul Cronin. How do KPIs change as the business looks to exit?
I'm not too sure. Dennis, you can jump in if you want to, but are you talking about the business is winding down, or you're looking at selling the business and you want to prepare it for sales, so to speak? They're kind of two different things.
Yeah. And that, okay.
If I'll just follow up, yes, so I'm a merger and acquisition advisor, and what sort of triggered it is, okay, we often talk to businesses a year, 2 years out, that's the process. But so they're typically coming to us and they're not looking to growth and all those other things. They're like, well, how do I get my house in order, kind of a thing. We're not accountants, we're not financial advisors. We don't do the data analysis. Someone like Dennis would do. But I was just curious in terms of when a business owner comes to you and says, "Hey, I'm thinking of exiting in the next year or two." Besides giving me referral, but what would you say? Okay, these are things you need to look at or optimize and so forth, and do those KPIs change in some way?
I had that perfect example is I do have a client, and I had a client that he did come to me. He says, "Look, I want to sell my business," but when we did the deep dive, he really didn't have any systems in place. So once we went to look at some of these KPIs and stuff, it was really, it was simple stuff like he used QuickBooks one way, but then when he wanted to do quotes, he wrote them out in a document, and then he printed out the document. He would deliver that document. That person would sign it and hopefully have a fax machine and give it back to him. So what was happening is he wasn't up to speed on his invoicing because of all or landing deals because of all that stuff at the beginning. So what right away I said to him, "Do you know that QuickBooks has an estimating thing that you can set it all up, and then when they accept it, you click a button to invoice?" And that was that simple. One little system put it in place to get that. But he had so many different ones because he was an older gentleman and he ran this system for so long and his business for so long that he did everything up here. And so what we had to do is get a lot of stuff up here into systems that would track data so that a oncoming person who is wanting to buy this business can see the data without having to talk to this guy because everything was up here.
Yeah. Yeah, and I agree. There's an old adage, you can't sell a job, but you can sell a business. So if you have a business that is lacking in structure and it's totally reliant upon you to move the dial every day, then you have more of a job. So one of the better books I've read in the last year was a book, I don't know who the author is, but it's called Built to Sell. And it talks about the transformation of a business that was struggling in a service providing business that he basically transformed it over a period of time from, kind of, we'll be everything to everybody, to setting up certain packages and structuring the business so that it was profitable, predictable, etc. So it was much more attractive to potential buyers than somebody just saying, this is me and this is what I do every day, because then you'd have to find somebody who's going to be insane to want to run the business that way. You'd have to have, as Dennis says, relying on structure and systems, and that makes you more attractive. So, I suggest to clients, they say, "Well, I'm thinking about buying the business, selling the business." I said, "When?" "Well, within the next 3 months." I said, "You're insane. This is probably a 2 or 3 year process that you have to go through in order to get ready to groom your business to make it ready to be attractive to potential suitors."
Okay. Well, thank you. Thank you, panelists, Dennis, Jim, our guests. We will keep you informed. Our next webinar is in March about how to reduce costs in your business by looking carefully at existing vendors, potential vendors, and overall ways of doing business. That should be interesting. Don't worry, we'll spam you, so you'll get plenty of information about when that's coming up and how to participate. But that's coming up in early March. Any parting words? All right. Well, thank you, everyone. We will see you down the road, and we'll share this information with you via recording and the slide deck. Take care.